I don't think so. You have to remember that the U.S. doesn't trade with China. U.S. businesses do. And when I take a look at U.S. businesses, I see earnings projections for the second quarter of 20% growth, and that's probably going to be low. So we're going to have another blowout quarter. Earnings are continuing to get stronger. I don't see any
I'm sorry to interrupt you, but on this
earnings.
very point, Bob Pisani has raised a couple of times that we may actually be getting to the point where the tariffs are becoming real, and therefore you will start to see an impact in earnings, and that could bring down estimates.
Right, and if I did see that, then I would become more concerned. But I think that when you take a look overall, that hasn't happened yet. So it's putting the cart before the horse. Investors are worried about the trade noise, but the meat and potatoes are really the fact that we've had tax cuts, deregulation, an economic backdrop that looks like over 4% for the second quarter, and this trade noise right now, it's still the peas, it's not the meat and potatoes. So I think that they should be looking at that, and until it's time to really see that drop, if that doesn't materialize, we could actually see earnings get stronger if we get better trade agreements.
Omar, what do you think?
Well, I think the fact that we have more volatility in the market is just the natural aspect. Today is talking about trade wars. We expect that tomorrow is going to be inflation expectations. We're going to see higher volatility. We just need to make sure that investors are starting to get used to the fact that the market is more volatile. I would agree that there is a lot of speculation about what the fiscal stimulus could do to earnings. I think it's not fully priced into it, but it clearly is not going to be the same if, in fact, this trade war and trade tariffs go into effect. There will be clearly a deceleration of earnings growth going forward if, in fact, this goes into effect. Now, that being said, we're still in discussion. Nothing is already in place. There's no policy that puts these trades into work yet.
But it's only a matter of a couple of weeks, Omar, and we're going to look at the first round of tariffs being implemented on July 6th. I'm curious because the market has basically been range-bound this entire year, and so the market has been anticipating higher earnings growth. The market has been anticipating a lighter regulatory touch, Karyn. The market has been anticipating a fiscal stimulus. The market has been anticipating a lot of good things here, and we're still range-bound. So if you throw in the possibility of the impact of tariffs, why do you want to remain bullish here?
Well, because
Karyn, sorry.
Well, it takes time for this to work through the system, but we are seeing it finally come through. We saw small business optimism at all-time highs, so it is going to take a while. But we have the economic wind at our back, and it's going to continue to strengthen. And investors are just getting a little impatient. They're taking a wait-and-see attitude. Now, I don't like uncertainty either, and I don't like the fact that all this trade talk is perhaps making businesses put off some plans for expansion, for more CapEx. But we are seeing a lot of capital expenditures. We're seeing companies going out there and spending more. That's going to increase productivity, and that's good for sustained economic growth. It just takes a little bit of time to work through the system.
Omar, give me a good idea for investing right now.
Well, I think that the biggest component right now is for people to continue to look at their long-term objectives. If anything else, this is the opportunity for people to go back and look at their holdings and rebalance their portfolio. If anything else, this is a perfect opportunity to go back into equities, given the solid backdrop we have on economic, front as well as on the earnings front. I would actually say that the only thing that I have seen changing in the last 2 weeks and potentially in the next week is the sentiment factors. People are starting to get more anxious about what these may come into fruition. We have midterm elections coming up soon, and that is going to continue to have that anxiety going into this. That's a big part of what I think we have to watch. The bigger area of concern to me, it's emerging market. Clearly, this is an area that we all have to look for that has potential for a lot of consequences if that goes bad.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.